How much deposit does a first homeowner need to get into their own home? This question is probably, I would say, the most question asked to me over my 12 years in finance. A basic rule of thumb is 10%. So if you're looking to purchase something for 500,000, 50 grand is what you would need to get you started. Like I said, so that's a rule of thumb. You would also be subject to getting a loan from the bank. So you would need the bank to give the money as well, obviously. Now, 50,000 might sound a lot to you, especially if people are renting. 50,000 can take quite a long time to save up. So today I'm going to give you a couple of pointers on where you may be able to kind of trick the system, I guess you could say. So number one thing that I see with first homeowners is getting in off a lower deposit. I've seen guys purchase house and land. So that is, they buy a block of land somewhere and build a house on it as their first home. So the advantage with this is you can find a block of land that will take a period of time to settle. So let's say, for example, the land is going to take 18 months to settle. So basically what this means is it's going to take 18 months for the block of land to switch into your name. So that buys you time to save up the rest of the deposit you need before the land settles and you can start building on it. Just a little side note there as well. If you're in Victoria and you're building your first home at the moment, which is July 2019, there's still a $10,000 first homeowner grant available for those first homeowners. So if it's house and land and you'll need to save up 50 grand for a $500,000 purchase, that $10,000 first homeowner grant can go towards that. So you'd actually only need to save up 40,000. But like I said at the start, you can get in off something small. So I'm talking something like 10 grand here, just enough to get deposits down and secure the land. The other thing I see people get in off really low deposits is by using a family guarantor. So a family guarantor is someone that's related to you that owns a property and they're happy to support you in your home owning journey. So how does that work? Basically, when a bank gives you a loan, they take the house that you're buying as a security. So if you can't pay the loan off, they'll sell the house and get their money back. In the case where you don't have a high deposit, it's too risky for the bank to do that. So a guarantor will allow the bank to hold your house, the one you're buying, and your family members, your guarantors, as security. That makes the bank a lot happier. And actually in that way, you'll save on interest and you'll save on mortgage insurance as well. So that's a great little option there that a lot of people don't really know is out there for them. That's it today. I hope you got a couple of really good pointers out of that. Cheers.